Joining me now to discuss Marco Papich, Clocktower Chief Group Strategist, and Marianne Montaigne, Gradient Investments Portfolio Manager as well. Thank you both for being with us here. Marianne, we'll start with you first. What exactly about this market could be constructive going forward, even though we sit at record highs?
Well, I think what's constructive, first of all, is in the banks that have reported so far where we thought there might be more profit taking. We're actually seeing them stabilize. Or if you look at the iShares equal weighted financials ETF, you will see that they're actually up slightly today. So the fact that they're holding in and there's not broad-based profit taking is actually an indicator that investors are standing by and waiting to see a next leg up.
So, Marco, are investors justified to be as bullish as they are right now, given the massive run that we've seen? Is the macroeconomic environment, the market environment, still constructive overall? Can we still say that it's safe to own risk assets?
Well, I mean, it depends on what your time horizon is. So if you're a longer-term investor, I think it's pretty clear we're in a bull market. And I mean, unless, somehow the COVID variants become extremely infectious or extremely deadly, I don't think that's going to change. The Fed remains very easy. Fiscal support is ample. And also you'll start seeing global growth catch up to the U.S. I think the biggest risk in the near term, though, is the economic optimism, because, of course, the 10-year has stabilized at below 1.6. But with some of the big supply months coming up in terms of auctions in May and then later in July and August, you will see higher 10-year yields. That has to happen, given that I agree that we're in an extraordinarily strong economic upturn.
Shepard Smith here. Thanks for watching CNBC on YouTube.